Ladies and gentlemen, good day and welcome to LT Foods Limited Q4 FY24 earnings conference call hosted by Systematic Institutional Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Himanshu Nair from Systematic Institutional Equities. Thank you and over to you, sir.
Thank you. On behalf of Systematic Institutional Equities, we welcome you all to the Q4 and Financial Year 24 Results Conference Call of LT Foods. We have with us from the management team Mr. Ashwini Kumar Arora, MD and CEO, Mr. Sachin Gupta, CFO, and Ms. Monica Chawla Jagia, VP Finance and Strategy. We will begin the call with brief opening remarks from the management team, and then we will open the floor for the question and answer session. I would now like to request the management to share their perspective on the performance of the company. Thanks, and over to you, Ms. Monica.
Thank you. Good evening, everyone, and thank you for joining us on our Q4 and Financial Year 24 earnings conference call. Before we start with the key highlights of the quarter and the full year ended 31st March 2024, I would like to highlight that certain statements made or discussed on the conference call today are forward-looking, and a disclaimer to this effect has been included in the results presentation shared with you earlier. Result documents are available on the company's website and have also been uploaded on the stock exchange. A transcript of this call will also be made available on the investor section of the company's website. I will now hand over to Mr. Ashwini Kumar Arora for his comments. Over to you, sir.
Thank you, Monica. We are immensely pleased to announce that LT Food has achieved robust growth in revenue and profitability for another year. Our three key segments, Basmati and other specialty rice, organic food and ingredients, and ready-to-eat and ready-to-cook segment have driven a remarkable 12% year-on-year increase in growth. While our Basmati and other specialty rice continued to outperform during the year, growing by 17%. Our ready-to-eat and ready-to-cook products have gained traction by growing at 23%, have further contributed to our revenue growth globally. This consistent performance highlights our strategic focus on brand building, innovation, distribution expansion. Our market share in India currently stands at 30.1 with an off-take volume growth of 11% for financial year 24 compared to the category growth of 8.9%. Additional investment on brand, distribution expansion, and portfolio expansion have played key role in this success. Moreover, the number of households consuming LT Food products grew by an impressive 11% to reach 50 lakh plus households in India. Our brand in US, Royal, has grown by 20.6% as compared to category growth of 17%. Our brand Golden Star has also grown by 30.8% as compared to category of growth of 11.6%. Golden Star currently has 15% market share in the jasmine rice segment in US. In Europe, our revenue grew by 11% year-on-year in financial year 23-24 by focusing on key accounts and branded business. In Middle East, our revenue grew by 42% and our brand share in premium segment has reached to 6.7% in UAE. The revenue growth has been delivered by strategic growth markets, UAE and Iraq driven by investment in brands. Our food business has grown 6 times since financial year 2020 and is expected to grow at a CAGR of 33-35%. The growth will be fueled by increased consumer distribution penetration and launch of new products. Our organic business, the revenue was hit by anti-dumping duty, but still I am happy to share the team has done a wonderful job by covering up the same to an extent. We are optimistic on the future outlook of the organic business. Looking ahead, we remain focused on strengthening our business fundamentals and by recruiting more consumers. We are confident on demand side, whereas we see a marginal impact on margin on account of Red Sea freight issue and investment on building digital capabilities. We are optimistic on our ready-to-eat and ready-to-cook business as well. We are doubling our capacity in USA in this segment. Our strategic initiative, including strengthening our core business across geography, organically and inorganically, expanding our product portfolio and adding efficiency across value chain, has established LT Foods as a dominant global player. We are dedicated to optimizing operations, improving efficiency, and maintaining our commitment to sustainability, guided by our ethos of quality and innovation. We aim to continue generating value for all stakeholders and achieving sustained growth in the years to come. Thank you.
Now we open the floor for question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the line of Pradyuman Chaudhary from JM Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I'm a bit new to the company, so most of my questions are rather a bit over a longer term related questions. So first being, if you look at the data from FY18 to FY23, our gross margins have expanded actually by 6 percentage points or so, yet our operating margins seem to be largely at similar levels. So has it got to do something with the change of...
I'm sorry to interrupt, sir. There is some background noise from your side. I just request you to use handset, sir, please.
Better?
Yeah, you can go with the question.
Yeah, hi. So my first question relates to if we look at your gross margins over FY18 to FY23 or even FY24, they've expanded by 5-6 percentage points, and yet our operating margins seem to be in a flattish zone. So is it due to some change in how we do our sales in terms of FOB or CIF? Or is there some other reason? Because a lot of it seems to be going towards trade and forwarding charges. The margin improvement seems to be offset by freight and forwarding charges over the years. So that's the first question. Then the second one relates to, you've given a guidance for ROE improvement to 20% in FY25, and we seem to be on our way there. But from a free cash flow perspective, there seems to be still a big headroom for improvement. That's probably because of inventory days. So what's our plan going forward? Like, where can we get these cash flows improvement from? What are the low-hanging fruits and what are we targeting really? And the third question relates to in recent times, we've done a fair bit of capex, right? Like close to 3% of our sales over a 5-6 year period. So has it been mostly towards maintenance? Has it been towards capacity expansion? Because my sense is the capex requirement for our business would otherwise be quite limited. So where has this capex been? These are my 3 questions. Thank you.
Yeah, thank you. So, Sachin, you can add wherever you wanted to. So I will take from, your last question on the CapEx. So the CapEx mainly has gone into three parts. One is, the capacity increase. The second is on the maintenance CapEx. And third is building, we have in the last 2-3 years, we have built, our own green energy. We have invested in solar. We have invested in biofuel generation, and some part has gone into the warehousing building. So broadly, the capex has gone there, and we have set up our RTH plant. We have increased our RTH facility in USA. So that's your third question. Second is on the free cash flow. Sachin will add into that, but broadly, on the work cycle, we don't see any further improvement, in the working capital cycle. But with the time, as our, jasmine rice business will grow, as our value-added business will grow, the mix will change.
Yes, you are right. And in this respect, I want to say that over the years now, if you are looking over 21 to 24, our working capital days from 232 days now it has come down to 188 days. And what we see currently in the rice segment, this kind of inventory levels have to maintain, and we have to age our inventory, and these inventory levels of the working capital cycle will remain. Of course, there can be a reduction of 1 or 2 days here and there. That is possible. But our major reduction in the working capital days will come in the RTC and the RTV segments. Once it crosses, and we aspire to have a 7-8% of our total revenue coming from this segment, which has a lower working capital cycle, then our working capital cycle will further be reduced.
And coming back to your first question on the, our gross margin has improved, but, our operating margin. But, if you see in the 5-year, we have improved approximately 2% on EBITDA margin from our lower side. But, as in the last 4 years, we have ran through, this disruption of COVID, Red Sea. So that has increased our operating cost. As far as your question, do we sell CNF, FOB? Majority of our business is, not only because, we have our own distribution, marketing in USA, Europe, and we sell, there as a, in a competitive landscape. So it's not like, so the balancing, the operating margin on the gross margin. So, we are confident, once this disruption phase will be over, we will be able to improve margin. However, we are improving on our return on capital employed as 21.7 and return on equity 19.3. Yes. I hope, that answers your all questions.
Yes, it does. Thank you.
Thank you.
Thank you. The next question is from the line of Jaydev Balaji from Equizone Analytics. Please go ahead.
Hello.
Haji, Jaydev sir.
Yeah, am I audible, sir?
Very much, very much.
Yeah, okay. So I just have a few questions to ask. So I just want to know how you're planning to grow your retail presence and distribution reach, like going forward, and what factors have impacted realizations this year, and what is the outlook on the export market? And can you also share more details on the growth strategy for basmati versus non-basmati rice segment? That's about it, sir.
Yeah. So, on the demand side, in the international market, we are optimistic that, the double-digit 10 to 12% growth will remain, intact. And your second question was on the retail and distribution. In India, we are just 140,000 outlets, although we are present omni-channel and e-commerce in modern trade. But in general trade, there is a lot of opportunity, and we are working on that to increase our distribution.
Realization, how the realization was impacted into it?
So this question I have not understood, realization impact. So what was your question on the realization?
So what factors impacted the export realization this year, and what is the outlook on export markets in the future years?
So as I told we are optimistic on demand side on the international market as well as in India.
Got it, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Naitik Mutta from NV Alpha Fund. Please go ahead.
Hi, am I audible?
Yes.
Hi, sir. Congrats on a good set of numbers. So my first question is, if I see in the last 4 years, we have spent close to 841 crores, in capex. Now I know you have given, broadly where you have spent the capex, like on energy or ready to heat and all of that. But can we please put numbers to those specific numbers, because 841 seems to be a big number. So if you can separate the maintenance capex and the rest, if you can give that breakup, that would be really helpful.
Sure, we can do that, but if you can just write a mail, we don't have that.
I'll write a mail, sure. Now my second question is on the international market. If I see the rest of the world seems to have degrown year over year. Is that right? And if yes, then what happened? If you could just elaborate.
No. International market, rest of the world.
So rest of the world, ex of Europe, US, and the rest of the market, ex of these two.
We have grown. So I think in the presentation it's not mentioned, but we have grown across all international markets as well as in India.
Okay. And another question is, if I see there has been, margin expansion on EBITDA level, which has come due to decrease in other expenses, ex of, raw material and employee costs, both on a year-on-year level. So I just wanted to ask, what is the sustainable level and how has this come about? I mean, what costs have we reduced?
So in terms of margins, you're asking about sustainability?
Yeah.
We are confident that we are confident on the.
No, sir. My specific question is that the other expenses have come down significantly, ex of raw material and employee costs. So if you separate those two costs, the remaining costs have come down significantly. I just wanted to understand what is the reason for that.
So this reason, there are basically different reasons: our operational efficiency and the reduction in the freight costs. This has led to a reduction in the other expenditure this year.
So majority of it would be freight costs, to say so.
I am talking about as given two aspects: operational efficiency and the freight costs. These two factors both have led to increase in my margin, EBITDA margin.
Sure. Thank you. Just one last question. Can you please give the realization in India and international both for rice per kg?
So the India realization this year is 65 and the international 138.
138. So that's it. Thank you.
Thank you. The next question is from the line of Hitesh Goyal from CLSA. Please go ahead.
Yeah, thanks, sir. My first question is related to the, if you look at the selling and distribution expenses, and when it's quite high for you guys as compared to if I look at KRBL, right, your competitor, which is very low, right? I understand that they have a more established brand. So can you give us some guidance how this S&D expenses could go down, and why do you spend more versus a competitor?
So Hitesh, our business model is different from the competition you are mentioning. We have our own distribution in major of the business, which is USA. We do 40% of our business, and we do our own distribution marketing there, as the competition sells to distributor and their books close there. So there will always be a difference of, S&D expenses as compared to them, whereas IT is consistently growing and delivering, the good margins.
Okay. My second question is, sir, in this business, obviously there is the inventory that you have to keep of basmati rice, right? So can you please, I'm new to this company, so just wanted to understand how do you manage the price fluctuation? Because you're buying the rice from the farmer and then you're keeping it for say 1 year and then selling in the market. Can you please help us understand, because the margins have been quite consistent over the last 10-year period, right? So that is very encouraging. But just want to understand how do you manage the price fluctuations in the rice business?
So, Hitesh, all is what we don't do trading or speculation. So whatever we source our inventory is all for the brand, and the brand prices as in the competitive landscape, almost there is no unhealthy competition there, like when the prices fluctuate. So basically, the strong brands help us to maintain our margin and the global presence. These are the two.
So basically, you adjust the pricing according to the market, and then you help us get the.
It's not. It's a very, very consistent. All in international market, and if you have seen, majority of the business, is not linked to the consumer prices, not linked to the commodity price.
It's a trade business, is it?
Historically, FMCG branded business.
Okay. And my final question is, when I see the Daawat versus India Gate pricing, like on DMart or anything else, right? What I see is that they command India Gate has a premium of 10-15% in terms of pricing versus Daawat. I'm also a basmati lover. I've always gone with Daawat because I like the taste. So just wanted to understand why this price difference generally between India.
Normally, we have not seen Daawat commands 30% share, and we are at par with competition. So we don't discount our brand. So maybe this store sometime do promotion on certain brands. So maybe that kind of experience. But normally our realization at every price point is at par with premium as compared to competition and not discounting.
Okay. So the final question on the ready-to-eat business. So you are saying your margins will go up to 14-15% for the company. This is for overall company, I'm assuming. And ready-to-eat will be the large, strong growth of 30% plus that you are expecting, right? So can you help us understand, right now it's not making money, it is minus 1% margin. So at what scale does it start making money? Can you help us understand the metrics of the business there, how the margins scale up?
So this business is currently contributing 2.6% of my overall revenue. So this will break even at a point of 370 crores of business. So currently it is contributing 200 crores of my overall business. So another 2 years is required for it getting a break even.
So how will we reach 14-15%? So after that,
yes.
After 2 years, the margins is increasing.
In the 5-year span, we are expecting that its EBITDA margin to be in the range of 8 to 10%. Then, of course, it has a higher margin territory, and as I have earlier explained, the ROCE is much better than in the rice category.
No, so I understood that, but you said 14-15% for the whole company. Our basmati margins are 13% today, and ready to eat.
That is at a 13.5%, and further to add this, we are expecting that it to grow at 15% mark over the next 4-5 years, and the remaining, the organic segment at a 10% we have a 13.5%, 13.5 to 14%. This overall will have an impact of having an EBITDA margin of 14 and a 14.5%. This combined, yes.
So basically, rice margins also goes up. And sir, Middle East, if you can share what are you doing with SALIC, because that's a big market. If you can give us some sense, how will you scale up Middle East?
So Middle East is our focus, and as we have seen that, we have grown, although the base is small, but we have grown this year 42%. As far as SALIC partnership is concerned, we all know that's a Saudi government sovereign fund. They are facilitating us to, as a government they can't do business, but they are facilitating our entry strategy in Saudi Arabia.
Okay, sir. Thank you. Thank you very much, and all the best.
Thank you.
Thank you. The next question is from the line of Vipul Kumar from Sumangal Investments. Please go ahead.
Hi, sir. So my question is ready to heat and ready to cook segment. You said at 370 crore it will break even. So it will break even at 370 crores EBITDA level or at net level?
So what we are talking about at the EBITDA level, it will be break even, and 370 to 400 crores what the revenue size needs to be. So it needs to be doubled from the current.
So over what time frame will it double?
2 years. What we are expecting that if everything shapes up well, the 2 years what we are expecting.
So in FY2026-24 we can expect around 350-400 crores in that business?
That's what we are targeting.
And so regarding that insurance claim update, the court has ruled in our favor, and insurance company has gone into appeal. But have we received any payment, or we have not received any payment?
No, we have not received any payment. The insurance company has gone to the next court. The court has heard us. So now they have reserved the order. So maybe in the week's time, we will have the outcome of that, and accordingly we will move forward and get the money.
And so my next question is regarding margins for jasmine rice. Is it comparable to basmati rice, or is it lower or higher? Any comments?
It's a comparable.
It's a comparable. And it will have a higher growth as compared to basmati?
In America, the jasmine market is 3 times bigger than basmati market. And historically we have seen that's growing more, as compared to basmati. And we have seen, the day we have acquired the jasmine business last year, we have grown by 30%, whereas basmati we have grown by 20%.
So we have just 15% share in jasmine. So who is the leading player in US, sir?
So leading is the private label business there, and there are other 2. Other Abro is a company which is a Spanish company. They are $2 billion in rice. So they are competing in that.
Okay, sir. I have further questions. I'll rejoin the queue. Thank you very much, and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Kavina Desai from Skyridge. Please go ahead.
Hello. Can you hear me?
Yes, Kavina.
Congratulations on a good set of numbers. My first question is, with respect to the share in profits of JV and associates line item, we see a sharp decline in profits this Q4 versus previous year's Q4. But however, when we look at it on a full year basis, it did significantly well in FY24 versus FY23. So are such big quarterly variations in this line item a normal thing, or this was unusual? Can you please throw some light on this?
This year, if you look at this year, the year or the quarter-on-quarter basis, the margins have remained consistent. there were certain, in the last year or the same quarter, there were certain profits which were at a higher rate. But over the year, this year, the profit has remained consistent over the quarter.
Okay, thank you. And the second question is, can you also throw some light on your current inventory situation?
So our current inventory level is that we have is 243 days of inventory and a value of 3,500 crores of inventory that is sitting in my books.
Okay, thank you.
Thank you. The next question is from the line of Aman from Augmenta Asset Managers. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. So, sir, my question was that, for example, if you look at FY24, we had a volume growth of around 9% and revenue growth of around 7%. So, could you highlight that going forward, what could drive the growth? Because since the last couple of years, basmati prices are strong. So, we are witnessing strong revenue growth. So, could you break up in terms of what could be the volume growth we are witnessing? And secondly, also, how are the basmati prices? Because like currently it's very early because we are just early into the sowing season. So some highlight on that, and also going forward, what could be the contribution from the volume growth side? Because revenue would depend, the revenue would depend on the value growth as well. So could you highlight on this?
So, if you see the last year, we have grown by 12% and the volume growth is 10 and value is 2. So we are growing both volume-wise and value-wise. And in our future model also, we have built, half value and half volume growth. So across, wherever, LT Foods brands and markets are, the category is growing, be it, America, be it India, be it Europe. So the consumption of this basmati segment is growing. Wherever we are in, jasmine is growing and basmati is growing. Organic, is also growing. So we see both value and volume growth in future, and what we have seen historically also.
So, sir, you are trying to say that going forward around that, as you mentioned, that will grow to the tune of 10 to 12% for the next upcoming year. So, you're trying to say 6% would be driven by volume and 6% of that growth would be driven by value, right?
That's yeah. Yeah. Historically okay. Also we have done, and we are very positive that the category will keep growing. And
okay. Yeah. So, sir, according to your market understanding, so how are the basmati prices currently versus maybe last couple of years?
Means today, or as the crop comes in in the month of start from the September, October, and last year our sourcing price was higher than the last year, around 10 to 12%, 12% higher than the last year.
So you're trying to say the current inventory which we have on books, the sourcing price of that is 10 to 12% higher than the last year, right?
Yes, you are, as stated by Shuniti. So the current price level in the season, what has happened, the price crop of paddy was higher as that of the last year. But our inventory level at the current rate, if you compare it with the last year, it is 5% paddy is higher than the last year.
Okay. Thank you so much.
Thank you. The next question is from the line of Rajneesh Mehan from Master Capital. Please go ahead.
Hello, good evening, sir. Congratulations on a good set of numbers. I just wanted to understand, is there any difference in quality of Royal brand that you have in US and Daawat Premium over here? Or it's the same?
Yeah, there are different varieties. So, in Royal, we have a very premium quality rice, whereas in Dawat also, it's a different variety of rice. There are 3-4 popular varieties accepted in different parts of the world. So, we, pack different varieties in different brands.
Okay. So why I asked is that because, with premiumization coming to India now with per capita income increasing, so is there a plan to launch, if Royal is a premium, then Dawat to launch Royal brand in India? And I also see that Dawat brand is not there in US. So is there a reason for that, or what are the plans?
Dawat is very much, in USA.
Okay. In your presentation, sorry, I couldn't see. And so what about, is there any plan to get Royal premium brand to India?
So Royal will be a, North America brand. They are very strong. Dawat is a very strong brand. So Dawat is present across all price point in India. And, our biryani rice, which is the most premium rice, price to consumer is in the range of 180 to 190. So we are growing roughly, 20% year on year.
Okay. And sir, the second question is, are you looking out for any more acquisitions in the domestic market or international?
So we keep evaluating, So historically, the company has been built both organically and inorganically growth.
Is there anything in pipeline? In immediate.
Nothing definite, but we keep evaluating,
Okay, sir. Thank you, sir. Best of luck.
Thank you.
Thank you. The next question is from the line of Sandeep, an individual investor. Please go ahead.
Hello, sir. Can you hear me?
Yes, Sandeep ji.
Sir, basically, I wanted to know, like in your ready-to-eat business, you have said that in next 5 years, it will contribute nearly to 10% of the revenue. So I wanted to know.
What we said, yeah.
So I wanted to know for the organic business, because it is a very important part. So next 5 years, what is the likely amount of revenue to contribute 20, 30 to the total revenue of consolidated profits, basically?
So Sandeep, if I have understood your question right, one, the ready-to-eat in the next 5 years, we have built, 8 to 9% of our total business come from food. Roughly 12% will be from organic, and rest is specialty will be, 80% will be basmati and jasmine rice.
Okay, after 5 years, 80% will be basmati, basically.
So because, basmati category is also growing. So,
Yeah. So I just wanted to get those figures. And secondly, sir, being an investor, I wanted to just take your guidance for next 1 year. Can we expect, like the PAD was very good, 600 this time. Can we expect a 30 to 35% increase as well as the planning in the trends next 1 year or something like that?
I will, I can't comment on the number but we, as I said in our, the commentary that, we are positive on the demand side.
And the margin you're likely to maintain as per the plan?
Yeah. So margin, as I said, there is a marginal pressure on because of this Red Sea freight, and we are investing in digital capability. But the demand side is strong, so the business looks very positive.
Okay. Thank you, sir.
Thank you. The next question is from the line of Jasmine Surana from VT Capital. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. I wanted to understand the volume degrowth in organic since the past 2 quarters.
Sure. Got it.
So, Jasmine, as far as, organic business, as I said, we have lost some business because of anti-dumping duty in soya. But, as I said, the team has done a wonderful job. So we have covered this year that shortfall by growing, other portfolio of organic food. So, the other portfolio is growing, be it, the oil seed, the value-added rice, and other lentils. these categories have grown. The soya is the only category which has degrown yet.
And is there any guidance as to when this will be recovered with soya?
Soya, this year we are positive that the soya will come back. Yes.
Okay. Thank you so much. That's it from my side.
Thank you.
Thank you. The next question is from the line of Shashwat Garg from SKU. Please go ahead.
Hello. Hello.
Hi, Shashwat.
I just want to ask that followed by the ban on basmati rice at certain price cap by government of India, then now it's Red Sea crisis. How are you getting any competition from basmati rice players from Pakistan, because Pakistan is exporting too much basmati rice to Middle East and other countries?
So, Shashwat, as far as, this MEP, what you are mentioning is 950. As far as LT Food is concerned, we all do, branded basmati, majority branded basmati export, and we don't feel any challenge on this MEP, and which, the result has also shown that. As far as Pakistan is concerned, yes, the Pakistan is giving competition to the Indian basmati rice as an industry. Europe, India has lost share as an industry.
Yes, sir. And
yeah.
my
as an LT Food, we are, our Europe operation this year has imported a lot of basmati from Pakistan.
Okay.
Yeah.
Okay. And sir, the second question is about the domestic market. Sir, your prices are just double from the local players. Like how to put? I want to put it like that way. You have only one distributor in Uttar Pradesh, like in the city of Lucknow, and while India Gate has distributor all over the cities in Uttar Pradesh. So how do you see the growth in domestic market?
Shashwat, I wish, we could have that kind of premium over commodity, but, that's not the case. So last year, as I said, we are, almost 9 price points, working in India, and we are very well competitive in the branded landscape.
Okay.
We are maintaining, rather we are growing our market share.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shubhankar Oja from SKS Capital and Research. Please go ahead.
Thanks for the opportunity and congratulations for great set of numbers. I have a couple of them. So if I remember correctly, after Q3 end conference call, I think we talked about a higher freight cost, and we also quantified that it could go up by even $4 to $5 million per annum basis. But surprisingly, obviously positively, we had a lower freight cost in Q4. So we did not have any impact with respect to the Red Sea crisis.
No, we are seeing the Red Sea impact. Our US Europe rate has gone almost, I guess, double the freight, but we have seen, because you have not seen the impact in the last quarter, because we always have an inventory in transit.
Okay. So which is
next quarter will have
will have some impact, you mean to say, the freight cost.
The marginal impact on the,
All right. Okay. And secondly, so with respect to your market share in Middle East, which is about 7%, so your one of your largest competitors seems to have lost market share specifically in the Saudi market. So haven't we managed to gain some sort of a market share in Saudi specifically or Middle East as a whole? I mean, what was the market share say a year back and what is it now?
What I called 7% is, in the premium segment, that is in UAE, not in the whole Middle East. By definition, we conclude Saudi, Iraq, Iran, which is a roughly 25,000 crore market. So, as I said, they are a very strong brand there, owned by local companies. And as far as LT is concerned, we have grown by 42%.
Okay. So no comment specific to Saudi market?
No. Saudi is a good potential market, and we are working on that.
All right. Okay. Thank you. And finally, so we had a great year with respect to free cash flow generation, but we still kept our payout ratio at a pretty low level. What is your thought on that?
No, we, as the guidance, we said that, we will pass on, we will, share dividend 10 to 20% of our consolidated margin, and we will, do that.
All right. Thank you so much, and best of luck.
Yeah, thank you.
Thank you. The next question is from the line of Vincent Andrews from Geojit Financial Service Limited. Please go ahead.
Thanks for the opportunity and congratulations for the consistent good set of numbers.
Thank you.
I have two, three data points. One is in continuation to the previous question. So can you please quantify how much is the freight cost in 321 crores this quarter as a percentage of sales, and how much you expect as a percentage of sales in the next quarter because of the Red Sea?
We can't share the detail on this phone, but you just can call the investor relationship, and we will be happy to share that. As I said, the freight is double to the Europe and almost again double to the US.
Yeah. Okay. So one more data point, like what is the volumes international and as well as India this quarter, and the realization that is in ongoing quarter, Q1 quarter for India as well as international.
So as the quantitative one, so we made a quantitative revenue of 185,000 tons, 186,000 tons in this quarter, and this is almost a 17% growth on the quarter-on-quarter basis.
For total, so can you please split in international as well as India?
That is 1 lakh tons in international and 87,000 tons in.
Okay. Thank you. And the realization in the ongoing quarter? What's the trend in India and the international?
As stated by Ashwini ji, so we will maintain the momentum, and we are hopeful that this year also we will have a quantitative growth of 7-8% this year.
Okay. Thank you.
Thank you. The next question is from the line of Vipul Kumar from Sumangal Investments. Please go ahead.
Hi, sir. What is our dividend distribution policy? So we have declared a total dividend of 1.5 rupees on our earning per share of 17 rupees. So it looks really very meager as compared to the profit and cash flows we are generating. So would you spell out your dividend distribution policy?
Sure. So we have given a guidance that dividend policy will be 10 to 20% of the consolidated profit, and we will do that.
But sir, If you take 20%, then it becomes 3.5 rupees.
Yeah, 10 to 20%. It depends, on the cash flow, on the future requirement, the requirement of the business. 10 to 20%. That's the range we have given.
And sir, one suggestion. Previously, we used to share all the tonnage for the quarter for India, US, Europe, and for Europe region, tonnage and rupees. That practice we have stopped. So I would request you to put those sections in next quarter's presentation. It will be really helpful.
Sure, we will evaluate your proposal.
Thank you very much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Mohammed Patel from Care Portfolio Managers. Please go ahead.
Yeah, hi. My question is very similar to the previous participant. The dividend policy is 10 to 20% of the consolidated profits. The announced dividend 1.5 is lower than the lower band, which is 10%. So this is what we all are trying to understand.
So in this, we had declared previously 50 paisa. This year we have declared 50 paisa again interim and 1 rupee as the final dividend. So this is the 2 rupees. So no, 1 rupee 50 paisa for the last year we have declared a dividend for this one, and that means
which becomes 10%,
almost 8.5%, 9%.
Yeah.
It is lower than the 10% band. So this is what you are trying to understand.
Yeah, you have a valid point, and we will in the coming year we will make sure that yes, we will look into in the coming year.
Okay. My next question is, so the volume number, if you can share for India International for the full year versus last year.
Yes. So you were having some questions?
Volume number for the Basmati segment, India International for the full year.
For the comparison. So for the full year, that is in the India, that is 318,000 tons, and the international 330,000 tons.
Okay. My next question is, so what is the outlook for the Basmati domestic business for the next year, and what is the outlook for the organic business in the near term?
So yes, we just mentioned that we are positive on all our markets, India, organic, international market. We are expecting to maintain the momentum which we have built in the history.
Okay. So organic business has done not that well in the last year, so it should be doing much better, right?
Yeah. So to our evaluation, organic business has done extremely very well because we lost good business of soya, but has been compensated by growing the other categories. So yeah, but in numbers, we will see growth from this year on year.
So soya will start contributing from FY25 with the different manufacturing location.
Can you repeat that, please?
So soya will start contributing again from FY25 because we had some.
Yeah, it will start. It is starting. Yeah, it is starting.
And the margin trajectory to 14-15%. So can we expect the improvement starting FY25 itself?
Okay. Which margin your voice is a little bit.
We have targeted 14 to 15% over the next few years. Can we expect the improvement to start from the next year?
This year, as I said, the EBITDA margin will be marginally impacted because of Red Sea impact and investment in digital. But if you will see every year, it will improve, and more on to see from the lens of the ROIC. If you see the ROICs are improving year on year, equity also.
Okay. In the past, there is one suggestion. So we used to give gross profit EBITDA for the three segments. So if you can continue that disclosure, it will help.
Sure. We will. Suggestion. Yeah.
Thank you.
Thank you. The next question from the line of Aman Sefi from iWealth Management. Please go ahead.
Hello, sir. I hope I'm audible.
Yes. Very much.
Yes. So, sir, I just want to revisit the earlier participant question on the gross margin side. So you meant to say that from the COVID level, the overhead cost has been spill over to the subsequent years. So that's why the gross margin expansion is not really seen at the operating level side. Is it correct?
What we have said that, the gross margin has improved, but, because of the disruption, our operating margin was, at one point of time, 18, 19 was, 10 and a half. Then, we have improved to 12 and a half this year. 12. Yeah. So.
But even though, sir, you see at the time of 2014 and 2015, when our gross margin used to be 25%, at that time as well, our EBITDA margin used to be at 10-11%, and now it has gone up to 12%. So is it the case, sir, that our business itself doesn't have the operating leverage? As the increase in the sales, our percentage to cost does also increases. If you see the employee, it was 2.3% as a percentage of sales, and then it has went up to almost 5.5%.
So if you compare the Basmati segment, you are comparing with the whole segment as such. There is Basmati, there is organic, there is RTE and the RTC segment. If you compare it with the Basmati segment, this year the EBITDA margins in the Basmati segment is 13.6%. So, but as we are making investments in the RTC and the RTE segment, that is overall reducing my overall EBITDA. And as stated by earlier also, this year my EBITDA margin in the organic segment has also had a hit because we lost the business of soya meal. So that had had an effect in the EBITDA margins overall.
And just to add, sir, if you see, we are consistently, giving growth, and the investment behind the brands is increasing also. So, yeah.
So, sir, even though if I add your last year's or ready-to-eat business EBITDA loss of 15 crore, that doesn't add much of your EBITDA margin side. So, sir, if you can just quantify the digital. Sorry, sir, go ahead.
So what do you mean to say is, Sachin, that, when you are comparing that time, only the Basmati business was there. But, Basmati business EBITDA has grown to 13.5 to 14%. Whereas, when the mix come of organic and ready to eat, that, is making average, which is 12.5.
And apart from that, as Ashwini was stating now, there is increased investment in the brand spend as well. So there, I have increased my brand spend almost by 1% over the year. So that is also having an impact. That though it has a positive impact on my revenue, but there is an operating.
It is a mix, but what we have to see is like the ROIC and return on equity that has consistently increasing year on year.
I got your point, sir. And sir, if you can just quantify the annual amount of your digital spend, how much is that?
So currently what we are expecting this year, our annual digital spend to be around 45 to 50 crores of that.
That's alone in digital media.
Digital
or capability. Digital marketing you are saying, or digital capability you are saying?
Digital capability, I mean to say.
Yeah.
So on the digital capability, we will be spending around 45 to 50 crores of spend this year.
Thank you. The next question is from the line of Rishi Kothari from PI Square Investments. Please go ahead.
Hello. Yeah. Thank you so much for the opportunity. So I just wanted to get some ideas to what CapEx are we planning for FY25 or any FY26 possible?
Sorry, what was your question?
What amount of CapEx are we planning for next year for FY25?
CapEx will be, same. As I said that, we are doubling our capacity of ready to eat in America. So next year will be in the range of 200 crore rupees.
Okay, so that will be more invested in the capacity expansion for the ready to eat business, right? Or is there anything else that you are planning to do?
Digital, all these things together will be around 200 crore.
Okay.
And we are putting up facility in UK also. We have inauguration in the month of July, that's a good news. So a lot of investment has been gone to building UK facility.
Okay, and also one more thing, since in terms of the acquisition, as you already talked that you are not, there are most of the companies that you are trying to see the fit for the company or not. But if, for example, if you are planning for an acquisition or any type of a company for acquiring, what would be the more or less business that you would seem to acquire?
Sorry, my dear, your voice is echoing and we are not able to hear.
Sir, I would request you to use handset, please.
Am I audible now?
You are audible, but your voice is, not echoing, not clear.
Yes, am I audible now?
Yeah, now it's better. Sir, it's better now?
Yes.
Okay. What I'm trying to ask is, if, for example, you plan to do acquisition in the business side that you are in.
Yes. Okay. So, no, actually, you are asking that, do we have any plan to acquire any business? That's what your question is?
The line got disconnected, so.
No problem.
Yeah. So, ladies and gentlemen, due to shortage of time, we will take this as the last question. I now hand the conference over to the management for closing comments.
Thank you, and look forward to see you. Thank you. Thank you.
Thank you. On behalf of Systematic Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.